So I made some good money today on some leaps, covered call options, and a cash secured put all in one day. Hello my friends, this is Legend. So today I made some money on some leaps, a covered call, and a cash secured put. And I want to go over those, show you where I got in, where I got out, and we'll look to see how much I made for each one. So if you enjoy this type of content, please make sure to hit that like button, as it does help the channel out. So the first one we're going to look at, as we're looking right here on IBM. And for IBM, I did buy a leaps on IBM. I do update all of my buys and plays when I make them to my Discord members. So they were able to see when I actually got in, and then of course, when I got out, as I did show the receipts on that as well. So the first one here is IBM. And on IBM, if I zoom in right here, I bought my leaps on January the 23rd. So the 23rd is this candle right here. So this is where I actually bought in on IBM. And I paid $39.75 per share times 100 shares. So that was about $3,900 that I paid to open that leaps on IBM. So just under $4,000 to open that leaps. Now, as you can see, it was toward the bottom of that Bollinger Band. And if we look back just a little bit, there is a bit of a support right through here, right? So I was kind of using that as a potential area that it could bounce off of. Now that leaps that I bought for IBM was set to expire in October of 2026. And that strike was at 280. So I opened it on January the 23rd, and I actually ended up closing it today. Now, that leaps was good all the way out to October of 2026, but I actually closed it today. Well, why did I close it? Well, you can see this candle right here. We had a huge pop today. And when I saw it at the first part of today, when it was way above the top of that Bollinger Band, I went ahead and I sold it. And I sold this one at $55.35. And since I paid $39.75 and then I sold it and earned $55.35, I earned that difference of $15.60. So that $15.60 times how many ever contracts I had, which was just one contract, times 100 shares, is a total of $1,560. And keep in mind, I bought that leaps on January the 23rd, and I ended up selling it on the 29th. So less than 7 days, and I made $1,500. So that's some really good money in just 6 days. And the second leaps that I was in was on NVDA. And for this one, I actually had this one for a while. Okay, so we'll scroll back a little bit, because I actually bought this one on November the 7th of 2025. So see this big long candle right here? Now it is green, but it was coming down that day. And whenever it hit my line right here, and I had drawn this line because of the supports, I drew that line here at about 180. And my idea was if it got down to that point, I would buy the leaps and then look to hopefully sell it in a shorter time frame and just pocket that difference. Now for this one here, like I said, when it did drop below that 180 or close to that 180, I went ahead and bought those leaps and I paid $95 per share. So that's $9,500 that I paid. And that leaps contract was out to January 2028. So I had bukus of time to actually stay in this trade. I was in no hurry. But the way NVIDIA has been going here in the last couple months, it's just had a really tough time to get above that 190 area. So when it did go back up and it got to the top of that Bollinger Band over here, I went ahead and sold that LEAPS. Now I bought it at 95 and I ended up putting an order in to sell at 105. So if I bought it at 95 and I sold at 105, that's a $10 move. $10 times one contract times 100 shares, and that is $1,000 that I did make on that LEAPS. Now, could it continue moving up and I could have made more? Sure. But over that period of time, that was roughly about 3% per month since November. So I went ahead and I just took it because that gave me roughly 10% on my money. And that's pretty good money in just a matter of a few months, even though I had plenty of time for this one to play out. But my thoughts were, if this one drops back down, I can buy another LEAPS and then do it again. Why not do a rinse and repeat rather than just hold? When it pops up, take that profit and then look to do it again if it drops back down. Now, the next trade that I did do was on TJX. So for this one, I ended up doing something a little different. And I told my Discord members just that, right? I was actually going to try and sell an in-the-money covered call. So what did I do? Well, I ended up purchasing 100 shares of TJX, and I purchased those shares at 146.25. And then I turned around and I sold a call at a 145 strike. So now keep in mind, I paid 146.25 and then I sold for 145. And that's why it's called in the money, because I bought them for 146.25, but I'm going to sell them for 145. So that is a $1.25 loss on the sale of that call. Now, why would I do that? Well, I don't want to lose the money, but since this is an option and that value of that option is worth $1.25, then the premium that I would earn will include that loss, that price difference, that intrinsic value. That will be part of that premium that I did earn, because the total premium that I did earn was $3.40. So if that $1.25 was the price difference, I do not necessarily make that, right? Because I am selling for a price that is $1.25 less than what I paid for them. So that part of it is the intrinsic value. Now the extrinsic value, or the time value, that is what is left. And that time value that would be left would be that $3.40 minus the $1.25, which is going to give you $2.15 of time value. So that is the amount that I'm looking to make on this. And this one, I had an expiration date of February the 20th. So I'm looking to make about $215 with an expiration of February the 20th. So this one being a little different because this one is an in-the-money call. I did buy the shares above what I'm willing to sell them at, but by doing so, I want to get paid that difference. And therefore, that premium that I did earn included that price difference along with the time value. But the time value of that $2.15 is what I'm looking at pocketing as profit. So the idea for this one is that price to close above my 145 strike. So yes, I am looking for these shares to be taken away, and they would be taken away at that 145. But I'm going to make and gain that $2.15 per share. But if the price does drop and it does close at expiration below 145, then I will still have the shares. I still get my $2.15 because that's already in my pocket. But now I have shares and I'll just look to sell another covered call at that point, earn some more premium until I get those shares taken away. Because for this deal, all I'm looking for is the premium. I'm only looking to make the premium. I'm putting up the cash to make the premium. So the last one that I did was a cash secured put on SPY. And as you can see, SPY had a drop today, did it not? Wow, what a fall. That is a nasty drop right there. This thing dropped as low as about 684.83. So when it got down to that point, I ended up selling a cash secured put at 684. And by doing so, I earned $1.25 per share times 100 shares. So that's $125 that got paid to me for selling that 684 put. Now, granted, had it stayed below that 684, then I could have got assigned those shares. And I was willing to get assigned those shares. But as fast as this thing fell down, it shot right back up and ended up closing at 694. So I was not assigned those shares. I ended up just getting to keep the $125, and I did not have to fork up any extra money to buy those shares, even though I would have been happy to own those shares at about 684, because I would have been looking for this one to pop right back up, and that could have been a good $500 to $600 capital price appreciation, along with the premium that I would have earned for selling that call, right along with the put premium that I did earn for selling that put. So I made some pretty good money today, and I threw it all into a little spreadsheet. So let's just kind of look over that. And here it is right here. Now, it's nothing fancy. I just threw this together just so that you can see on the wrap up right here what I actually got, what I actually earned, and how much money did I actually make today. So just as a recap, you can see IBM, I had the leaps. I bought those on the 23rd at $39.75, and I ended up selling them on the 29th for $55.35. What a crazy move, right? Now don't forget, this one here actually had an expiration date of October of 2026. So this had plenty of time. But if I'm going to be able to earn that kind of percentage gain in less than 1 week, yeah, I'm going to go ahead and take that for sure. Wouldn't you? I would hope so. And the second one right here was my NVIDIA leaps, where I bought it on November the 7th of 2025, and I paid $95 per share. And then I sold it today for $105.05, actually, to be exact, which then gained me $1,005, because the difference there is about $10.05 times 100 shares is $1,005. So that's about a 10% move on NVIDIA. And since it's been having so much trouble getting above that 190, I went ahead and just took that. And if it comes on back down, I can look to buy another leaps on it and do it again. And hopefully even buy that leaps at even a better price. And I'm sure now that I sold NVIDIA, now it'll take off and it'll go to $240 per share, and I'll just shed a small tear. But you don't know what the future holds. So when it does provide you with a gain and you're happy with that gain, it's better to go ahead and take that gain rather than chance it, because who knows, this could move on back down and I could be holding it for a bit longer. Now, I had plenty of time on NVIDIA because I had an expiration date of January of 2028. So plenty of time. The third one was TJX. Now, this was that in the money covered call, but as you can see, I did buy those shares at $146.25 and I sold that call at $145. So as you can see, I'm selling under what I bought them. So that is a loss of $1.25. And that's this in the money part, right? So it's in the money by $1.25. And the premium that they did pay me was $3.40. Well, if that $1.25 is a loss because of the price difference, then I have to subtract that out of the premium to find out what I'm looking to make. and that's my time value of $2.15 times 100 shares is $215, and I will look to clear this as long as TJX stays above 145. If it does not and it drops down below 145 and closes, then this covered call will expire worthless. I still make the $215, but I will still own those shares at my 146.25, right? Because that's what I bought them at. So I would then look to do another covered call at that point. Now this one here does expire on February the 20th. So I've got about a month on this one. And of course, the last one is SPY, where I did the cash secured put, and I sold that cash secured put at a 684, and that paid me a premium of $125. And that was a day trade because it expired the same day that I actually opened it. And of course, since SPY did close above 684, I am not assigned those shares. I just get to keep my 125. The option expires worthless, and I can look to do it again if SPY does drop. Now, I will say on TJX, this one is not closed out, right? Because this is the only one that is actually still open. It has until February the 20th. So until that date, yes, I have earned $215, but do my shares get taken away, or do I keep my shares at 146.25 and then I look to sell another call after February the 20th? Only time will tell, but I just wanted to note that TJX is currently still open. The other ones are closed out. The leaps on IBM and NVDA are closed, along with the SPY cash secured put, as it did expire worthless today. So totaling everything up, today I made $2,905. What a nice payday for me. Now I do want to show you one little sheet that I am working on. It is a sheet that is a bit in progress, and here it is. This is my selling in the money covered call worksheet. And what I'm trying to get it to work out for me is I can enter in the ticker symbol, of course, and my purchase price. And this is that purchase of those shares that I did make today. And then I can enter in that expiration date, my strike price, the limit price, and this is how much I actually earned, not how much I made, but how much they paid me, and then how many contracts, so that it can do the rest of the calculations. So it tells me exactly how much I have invested, the total premium being that $3.40, as that is how much I got paid, and that total times the 100 shares times how many contracts gives me a total of $340. Now, how much of that was in the money? And we've went over that, and that's that $1.25 right here. And then we get that time value, which is what we're actually making. And that's $2.15. The 215 times 100 shares times how many ever contracts is going to earn me $215. That's how much I actually make on this trade. It then calculates what that percent earned for that particular investment is, and then it multiplies it out, divides it by the 12 to find out what that simple annualized ROI would be. And that's for a month of 2% for the month. Now, of course, TJX does not have a really high implied volatility. Therefore, that percent earned is a little on the lower side, right? But still, 2% for the month on one position, that's pretty good. I'll take it, right? And then the last row, we're calling out that current price of 147.47. That's the closing price for today. And it also shows you at what point you actually start losing, because this 144.99 is basically that 1 penny below my strike, because after that point, now I am starting to lose money. And when I mean by losing money, I mean it is eating into my amount that I have earned, because the $1.25, that is my downside protection, right? Because that 146 is the strike price, and that strike being 145, there's that $1.25. So as long as it stays above 145, my shares will be called away, and that loss is captured in the total amount that they did pay me, as that is part of the premium that I did earn. But I clear the $215. Now, if I were to go all the way down to my break-even value, that's $142.85. That means that at that point, I have pretty much eaten up all of my premium of $215 that I did make, right? Because that's basically this strike price of $145 minus my time value of $2.15, because that's what I made. But if it gets below that $142.85, now that is how much it's actually down in price value. Now, I don't necessarily lose the $215, but that price has dropped below the amount that I actually earned, and I did not really earn anything at that point. So currently it is profitable. The buffer amount before loss, that's that $2.47. And what this tells me is it is looking at that current price of $147.47, and it's subtracting the strike price of $145, and that's giving me my $2.47, and that's my buffer, right? That's how much of a buffer that I have before that current price starts infringing upon that strike and then possibly not be taken away, as I'm looking for these shares to be taken. And of course, that gain or loss here, that gain would be $215 as we stated. And the number of days in the trade is 22 days. So therefore, for that particular trade, that's about a 1.47% on just that single trade that I would make in just the 22 days. Now, since TJX is not a high volatile stock, it does not pay high premium. But of course, the higher the premium, the more risk that you do take. Do note that you own those shares at that purchase price. So if that stock plummets, you still have 100 shares at that price. So you should not do this type of trade if you do not want to keep those shares at your purchase price. So that's the reason I always go back to my chart, and I'm always looking at that MA200, and I want to see to make sure this thing is moving up and to the right, and that 5-year, it's moving up and to the right, because if I have to own these shares for a long period of time, I want to make sure that overall history shows it wants to go up and to the right. Now, of course, none of that is guaranteed, but that gives me a little bit of a better feel if I do end up having to hold these shares for a period of time. So again, this is just something I was playing around with, trying to figure out a way that I can enter in the strike price and that limit price and find out at what percentage that particular trade is going to give me. And I can actually then enter in how much I would actually want to make per trade, and as well enter in the minimum I would want to earn per month. And that will also flip these from green to red. Because if I was wanting to make, say, 2% on this trade, and I'm changed this to 2%, you can see that that 1.47 right here is now red because it is under that 2%. And that per month, if I was looking to get 3% per month, you can see that 2.03 does not meet that criteria, so that now it is showing as red. So that way I can play around with my strike, my expiration date, and that limit price to find one that actually will show me the amount that I'm looking to make. And of course, this number here is just as important because this is actually how much I'm going to earn. So if I want to make $100, or if I want to make $200, or whatever I want to make on that trade, then this number is what I'm looking at. So I do kind of like this sheet. I've been playing around with it. I've been making a lot of changes to it, adding things to it. But once I do get this cleaned up a bit and make sure that everything kind of goes the way I want it to go, then I'll also offer this up to my Discord members. And there will be a link to download this one as well. But like I said, I'm still working out the bugs on it. Want to make sure that it's good and clean. I just want to give you heads up of yet another sheet that will be soon coming out to the Discord members to use if you are using it for covered calls. And for this particular one, this is selling an in the money covered call. So I also want to make a sheet for the different styles and types, because what if you're selling out of the money covered call? So eventually I'll have sheets for those as well. So as these sheets will be coming soon to my Discord, come on over, join, where you can also get the high yield ETF tracker sheet, as you've seen here on many of my videos. That is available to my Discord members. But my in the money covered call, that's coming soon. I just need a little bit of time to get things cleaned up. But that link to the Discord is in the pinned comments and down in the description below. So I think that's going to wrap it up for today. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.